So, a couple of things. First and foremost is I think I wrote about this in the right side report about how the market seems like it's ready to go higher, but we are still running into a little bit of challenge. On Friday, the market ended with a good positive note. We rallied like we wanted to see the market. It turned bullish. We now know that we are facing we are in the beginning of a bullish trend. I want to caution us to be very careful, simply because even though we have this bullish trend that we just started a new bullish trend based on last week's price action. The problem is the right model hasn't given us a buy cover signal. So we can see right here on Friday, it told us if you go in, you can see where it says long stop, exit short. What that simply means is if you're long, we don't have enough data to clear us for a bullish trend. And so even though the bullish trend is starting, it's kind of like one of those situations where we have a bullish trend, but it's weak right now. Does that make sense? And that's why it's given us that, hey, if you go in, long stop. Now today, it got worse because it's one thing to tell us, hey, make sure you have your stops in place, but now it's really telling us, it's taking it to the next level by saying, not only should you have your stops in place, but if you're thinking about getting out of your long positions, it's not a bad idea. I don't like that. I don't like that. In the beginning of a bullish trend, we should not be seeing that type of a warning sign that early on. I don't mind seeing that after we've made all-time high or we're close to long-time highs, but to see that early in a bullish trend is not a good sign. I like the fact that the market is turned bullish. This is what we've been looking for. What I do not like is that the market is not giving us a clear buy signal. And that's what we see here. So I just urge everybody to be patient. I'm being patient now. If we had got the buy cover that I was looking for, I would have bought a whole lot more stocks. What I'm concerned about, and what I'm concerned that the right model is hinting to, which is something I say be very careful about going into this week. But I'm going to be paying attention to this simply because of what I am about to explain to you. We filled this gap. You guys see this gap that we had on Monday? We have now filled the gap. Market turned bullish. However, again, goes back to the right model. It's saying don't get too excited when it said just long stop. Today, it's telling us get insured or look to start exiting your positions. Now, usually when I see get insured or get out, I like to just get insured. I don't typically get out. I like the market to stop me out. But what this is basically telling me now is don't get too excited just yet. Maybe if more data comes and everything looks better, we would update that tomorrow. But for now, the data is showing that the bulls are not as strong as they should be. And so my concern is that we're just filling this gap in anticipation of the rollover back to the downside. Makes sense? It is a possibility. Am I counting my chickens before they hatched? No. Am I panicking about the rollover? Absolutely not. But I am saying I'm going to be watching for this each day this week. So much so that let's say tomorrow we see a sell short signal or something like that. I would say yes, we are in for a pullback. And the first target would be this right here, potentially even taking that lower. What this would then become, and the reason why I'm saying this as well is I think some of you who are brand new, you probably haven't heard me say this, but you will hear me say this soon. One of the things is when the market is heading higher and we have the swing high, swing lows. So this is the swing high up here, swing low. This is the high up here. This is the low, swing high, swing low, swing high, swing low. That is the classic definition of an uptrend. My thing was one of the things we incorporated into this platform is to give us an idea of where is the swing low. And we know that we have a swing low when we have a red column like this, and we've established the low. What I don't expect is for that low to be taken out. So imagine what we've been seeing, and that's how it's been working for pretty much all 2021 with the swing high, swing swing low, which is higher than the previous low. Then we had a swing high and a swing low, which is higher than the previous low. Okay. But what we see now is we had a swing high, but then what end up, this is literally what we have taking place. So we took out the previous low, and that's what we see taking place here. So this is why I'm saying, we took out the swing low. Things turned bullish, but the right model is saying don't get too excited yet. Typically at this stage, we should have already been getting a buy cover, and that would have told me get ready for it to take out the all-time highs. But now some situations have taken place where we violated the swing low, and then we got a bullish trend, but the right model is still saying, get in short or get out. Early on in the bullish trend, it's not usually a good sign. I hope I'm making myself clear. So the reason why I'm saying be careful, pay attention to this, why I'm going to be paying attention to this now, is in lieu of this new information, it's possible that we had something that was doing this, now it's done this, and getting ready to do something like this. Does that make sense? Which means that we could start seeing a rollover. And that's what I'm trying to make everybody on this call aware of. The likelihood of this happening now has increased.